this is going to be a overnight or over the weekend type of event where you have what you have on a Friday, you wake up on a Monday morning and you can't trade anything and you're locked into your position. So it's absolutely imperative that you have what you want to have in the new coming world, because you won't have a chance to change it.
Hey friends, welcome back. I have on the line Bil Holter for a return call, a very, very important call, and one that I've been excited to have with Bill because all hell is breaking loose behind the scenes, actually in front of us all, but I bet you didn't even notice it, which is what Bill said in a recent article. Bill, welcome back.
Glad to be back. Thank you.
Hey, very glad to have you here. I know you've got an announcement to make. You will no longer be writing for Miles Franklin, but that doesn't mean you're disappearing from the scene, so we'll talk about that. But I want to jump into your recent article. I bet you didn't even notice it because, as you wrote, all hell broke out in the credit markets during the overnight hours last Thursday morning, and it has since happened again. Bill, as the Mockingbird mainstream media has us trained to watch only the NASDAQ and the Dow and the nightly news as we quote-unquote monitor the markets, you tell us what the truth is. What's the biggest market on the planet that we all should be paying attention to?
Well, we should be watching the credit markets, and the press is not reporting on the credit markets at all. When people get home, they turn on the TV, or if they're in their office or whatever, everybody watches the Dow Jones Industrial Average. That, in today's world, is meaningless. The entire world is built on credit. It's the credit markets that we need to be watching. And for example, the 10-year Bund, the German Bund, 2 weeks ago, or now it's close to 3 weeks ago, was trading under 5 basis points. Last Wednesday night, Thursday morning in the wee hours when they were trading, it traded up to either 77 or 79 basis points. That's a 15-fold increase in yield in a 2-week period of time. They again had disorder overnight. I think it was Monday and Tuesday this past week. So they've actually had 2 major league convulsions, meltdowns if you will, which also included Japanese bonds and included all the other periphery, the French, the Spanish, the Italian bonds. So the credit markets literally went into convulsion. And not a peep from our press. It's extremely important because everything in the world today is built on, based on, valued on, runs on credit. And if credit seizes up, everything will seize up.
Now, I think it's important to have this discussion for a number of reasons, Bill. Number one, we've been documenting the collapse, both you and Andy over at Miles Franklin, and of course the work we're doing at SGT Report. As you note, sovereign notes and bonds are the bedrock of the entire financial system. They're supposed to be, quote unquote, safe. They are supposed to be for widows and orphans. Sovereign credit are the core to nearly all retirement funds on the planet. When we have been saying that they are coming for your retirement funds and that those who believe in this system and think this system is just going to go on forever as it currently stands, we've warned those people that they stand to lose everything. Is this the best real-world example of what we've been talking about? This is how people could lose everything if these credit markets go, right?
Right. If the credit markets go, everything paper, all bank accounts, pensions, etc., they're all based on the credit markets. They're all based on sovereign debt. Now, if you go back to the 2008 financial crisis, what happened there was the world was saved, if you want to call it that. But the manner in which it was saved was through the central banks printing money and these sovereigns going further and further into debt. They saved the system by putting their balance sheets on the line. Now their balance sheets are upside down. Once this begins to melt down, there is no white knight left. It's over. There's no one that's going to ride in and save the central banks and treasuries of the various nations that are upside down.
Well, Bill, you know as well as I know that the Fed is out of bullets. So when we lived through the 2008 crisis, the Fed pulled out all the stops, of course, to try to save the system from implosion. And, those aren't my words. Those are the words of Representative Paul Kanjorski. Let me play this clip for you and help us understand how what they were able to do then to stem the tide and the collapse, they probably will not be able to do again because they've used up, as I said, all the bullets in their chamber. Listen to this.
On Thursday at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks.
Now, I just wanted to play that for you to get your impression, Bill, because A, you're an expert, and I think you, like I, see it coming again. And I don't think the Fed is going to be able to save us this time, because whatever the coordinated attack was that unfolded, that Kanjorski is describing there, is certainly coming again. Whether it's hedge funds or central banks aligned against the dollar, whatever it is, it's coming again. And this time, I don't think they're going to be able to stop it.
Well, I agree. I think it is coming again. I think it's bigger, and I think the Fed, the central banks, etc., their ability is smaller. If you go back to 2008, we found out that the Fed lent out 16 trillion with a T dollars all over the world, and more than half of that was to foreign institutions. $16 trillion won't do it this time. I mean, you're talking about a credit market that's going to go into convulsions of over $100 trillion worth. And you're looking at derivatives, which have expanded to over, I think the last number I saw was 1.4 quadrillion. So, yeah, it's coming again. It's going to come again harder and bigger. And rather than having a bazooka, they've got BB guns.
Yes, and you just made mention of the derivatives problem, and in your article you note derivatives are a $1 quadrillion ticking time bomb soaked in gasoline and sprinkled with gunpowder. The volatility we are seeing right now are the matches. This is a tinderbox ready to explode, and I'm not trying to use hyperbole to frighten people. I'm trying to use facts to wake people up because, Bill, as you know as well as I do, the majority of our friends, neighbors, and colleagues are asleep at the wheel. They do not see this tidal wave, this tsunami coming. And what you also write in your article is that you must understand power is currently debt. The control of debt is also the power of prices. Once debt breaks loose and trades out of control of central banks, these central banks will also lose the control to price everything else. That means the stock market, everything else comes down like the Ponzi house of cards that it is.
I think that's exactly right. We live in a world where all the markets are rigged. And once the credit markets break, that is the core of everything. That is the core of their power to price these markets. It's the core of their power to be able to fund the ability to price markets. And once the credit markets break, Mother Nature will take over. And I think people will be absolutely shocked at the values of various assets. Some things that are valued, let's call it 100% now, they could be as little as 5 or 10% or less. Other things that are valued at 100% now could be valued at 500 or 1,000%. So much has been propped up, suppressed, and not, I don't even want to use the word massaged because it's been brutal rigging of all markets. The markets do not resemble even close to what the reality is. And when the credit markets break and the riggers lose their power, everything is going to look different. And this will happen in a very short period of time. This is not something that they're going to be able to kick the can and we can have a a bull market and gold should be a little bit higher and interest rates should be a little higher so bonds go down. No, this is going to be a overnight or over the weekend type of event where you have what you have on a Friday, you wake up on a Monday morning and you can't trade anything and you're locked into your position. So it's absolutely imperative that you have what you want to have in the new coming world because you won't have a chance to change it.
Yeah, and a lot of our listeners are old enough to remember what happened when the internet bubble broke. They're old enough to remember what happened in 2008. There have been countless cycles, and we talk about the Shemitah, the 7-year cycle. There are countless cycles, and they tend to be about every 7 years, where we see these markets melt down. But prior to this, we've never had this background of problems. We haven't had $210 trillion in unfunded liabilities. We haven't had the $1 quadrillion in outstanding derivatives. The backdrop now is so much worse than it has ever been. But what I'd like to do now, Bill, is bridge over to gold and silver, because last week on Wednesday and Thursday, we saw a heck of a move in both gold and silver. I think on Thursday, both metals broke through their 200-day moving average. And I wrote on Wednesday that perhaps the moves in these monetary metals are due to the absolute chaos we've seen in global credit markets, referencing your article, over the past week. Perhaps it's the realization that Greece is toast. Perhaps it's the emerging understanding that the U.S. economy, when judged by real accounting data, is on death watch. Perhaps it's a combination of all three of these. Or perhaps, as Charles Mackay once wrote, the men that went mad in herds are recovering their senses slowly, one by one, and realizing that the only asset class left with no counterparty risk is physical precious metals. Let's talk about the great silver debate, your latest article. What do you see happening with physical gold and silver? Certainly the price moves have been encouraging as reality sets in. Is that what's going on here?
Well, yeah, it does look like we're breaking higher. We're breaking out of this range that we've been in since I guess since this past November, December. I believe the precious metals are beginning to sniff out the fact that the system, all the way to the top, all the way to the treasuries and the central banks, is facing one giant margin call. And what you just said about gold and silver not being anyone else's liability, all currencies are the liability of the country or the central bank that issues the currency. So when this thing comes down, whether you're holding yen, whether you're holding yuan or dollars or whatever, you're relying on the financial strength, the financial solvency of a nation, or in a instance of the EU, the solvency of the European Union. Silver and gold are completely different. They have value because they are. They have value because it costs money, it costs capital, it costs labor to dig those out of the ground. They have real value. They have, if you want to call it value given by God, they're God's currencies. They're not currencies issued by and backed by a government. So that's the big difference, and I really do think that they're sniffing out this margin call. I spoke yesterday to Jim Sinclair, and he believes that the 1138 level that we reached back in November, the odds are very high that is a hard bottom, and they will not be revisited.
I know you've also been speaking to Jim Sinclair about this JP Morgan silver position. You've been doing your own research. Of course, Ted Butler claims JP Morgan has accumulated at least 300 million, 350 million physical ounces of the white metal. What is your stance on what JP Morgan is doing? Why are they hoarding so much physical precious metal, which is more than double what Warren Buffett ever held when he had the biggest position on planet Earth? What are they up to, and what does it portend for the future of silver prices?
Well, there's several theories. One of the theories is that JP Morgan is building this massive physical silver position so that they can go in and dump it and kill the price. And I think that's ridiculous because it's been so difficult for them. They can easily push a button and sell futures contracts and knock down the COMEX price. But for them to accumulate, if they in fact have accumulated 350 million ounces or more, And it is possible over 2 or 3 years' time or even longer, they may have accumulated this big position. If they have, my guess is if they have, first off, it's because they're bullish on physical silver. In my opinion, that could be the only reason. If they have accumulated this physical position, then the short position, rather than the long being a hedge against the short position, I believe they can step up, start covering the short, flatten the short, and just keep buying and become long on the COMEX. They, in essence, would just revalue their position, the physical position. Now, there's another theory, and I tend to believe that there's some truth to this, is that back in 2003, the Chinese lent the U.S. 300 million ounces of silver. And that was along the time frame of the Warren Buffett 129 million ounces or whatever. And I believe it was a 10-year lease. And I believe that lease was defaulted on in 2003. That would explain the crashing of the price in April of 2013. They had to shake some silver loose. They had to show the Chinese, if you want to call it good faith, all the price is dropping, don't worry, the price is not going to get away from us, you'll get your silver back. So that's a theory. I cannot prove that, but I do believe that that's the case. I do believe it has something to do with us defaulting on a 300 million ounce loan that China gave us in 2003.
Interesting. That is so interesting, and it does make sense because, we know that J.P. Morgan is the custodian of the SLV. Is that correct? Or is it HSBC? I always get that mixed up. I know HSBC is GLD. It's one or the other. I think J.P. Morgan's SLV. And we're certainly going to hold our positions and continue to stack because under the cost of production, which is where silver is right now, I don't care. People can debate that all day if they'd like, but I tell you what, when you hear mining company officials say that we can't pull the stuff out of the ground for less than $20, $21, $22, $24 an ounce, when we have to include our capital expenditures and our investments, and we have to include taxes, and we have to include all of this stuff, the cost of pulling physical silver out of the ground is much higher than $17 an ounce. So it warrants saying that whatever JP Morgan is up to, we know the backdrop is debt markets that are ready to collapse, and the only real tangible assets left to buy, correct me if I'm wrong, Bill, I don't know what else you'd buy, are physical precious metals.
Well, you wouldn't really be buying physical precious metals. They are money themselves. You'd be swapping a currency into what I believe will be currency. Gold and silver have been demonetized. They're coming back into the system. They're not going away from the system.
Right. Yeah, they have been demonetized over time, purposefully so, and that has been well documented by Charles Savoy's The Silver Squelchers. It's a 10-part series. He's still working on it, and it's jaw-dropping. The collusion and conspiracy to destroy silver, to hoard it, destroy it, demonetize it, is really stunning. I mention that work from Charles Savoy often because he's really done terrific work that I haven't seen anywhere else.
Sean, one other thing. This low price in silver has mothballed all kinds of projects. So if you're looking, let's assume that we're wrong about the credit markets, and I think that's a poor assumption, but even if the credit markets don't blow up, 2 years, 3 years, 4 years from now, the amount of silver production is simply going to decline because there have been so many projects that have been mothballed that are on care and maintenance. Production is going to decline.
Yeah.
I highly doubt that demand is going to decline.
Yeah. You can see me, the audience can't. I'm nodding my head through that entire statement because there will be a period of time when even less than 9.5 ounces of physical silver is being pulled out of the ground than gold because the silver miners cannot compete. They cannot survive. They cannot stay in business, which means even though the silver to gold ratio right now is 70, 75 to 1 or 65 to 1, it's coming out of the Earth's crust at 9.5 to 1, and that will even fall lower because silver miners can't compete. What I'd like to do before we let you go, I know you want to make an announcement about your future plans here, but I also want to ask you about exchange-traded funds preparing for a liquidity crisis. It really kind of brings us full circle. Michael Snyder, our friend over at the Economic Collapse blog, is reporting that some really weird things are happening in the financial world right now. And if you go back to 2008, there was lots of turmoil bubbling just underneath the surface during the months leading up to the great stock market crash in the second half of the year. When Lehman finally did collapse, it was a total shock to most, but we later learned that their problems had been growing for a very long time. And I believe that we are in a similar period right now. I think this ties into exactly what you're talking about with the credit markets. We see exchange-traded funds actively preparing for a liquidity crisis and a market meltdown. If that doesn't wake you up, I don't know what will, folks.
They know it's coming. For them to go out and set up credit lines in the billions, they know something is coming. I somewhat have to laugh at that, though, because what good is a credit line if the bank that you got the credit line from is insolvent or can't forward the funds? It's going to be very interesting. And again, that goes back to counterparty risk.
Yeah, it does, and it actually brings this thought up, too, before I let you go. It reminds me of what John Williams is saying about hyperinflation. All things being equal right now, if the money printing stops today, John Williams still believes we're going to see hyperinflation of the dollar, right? My thought is that in an economic collapse, in a market meltdown where the Fed needs to step in again and issue, what, hundreds of trillions? I mean, we're almost assured of a hyperinflation should they try any of the same measures they tried in 2008. It's an assurance of hyperinflation. There is no escape. We've reached
debt
the point...
saturation.
Debt saturation. We have reached the point of no return.
Right. And I think John Williams is right. The deflation, inflation argument, like Harry Dent has been saying, 100 trillion or more is going to go up in smoke. That's true. But the deflation itself, the collapse itself, collapses down upon the dollar, making the dollar worthless. If the dollar is worthless, are you going to call that deflation or are you going to call that inflation? That's hyperinflation if it goes to zero, if it becomes worthless and not accepted.
Yeah, that's right. And the only thing the dollar has left is confidence. Once confidence in the dollar is gone, I mean, it has no really intrinsic value at this point. So once confidence is gone, all bets are off, and that is the race to hyperinflation, which will destroy our way of life. And it really makes you wonder if that's not what Jade Helm is about. And we see the government preparing in so many different ways for civil disorder and unrest. It's very, very frightening stuff. And our goal here at SGT Report has been since day one to try to wake up people, to try to get them to take measures to protect themselves against a worst case scenario. Because the worst case scenario, as I've said before, is Cormac McCarthy's The Road, right? It's practical Armageddon. A step before that, though, is an economic collapse that makes the entire country look like inner city Detroit, and we don't want people to have to suffer through that. Precious metals in physical form are definitely one measure of real-world tangible wealth that may protect you from this crumbling dollar. Well, Bill, I know you have an announcement to make. My understanding is that you may not be writing for Miles Franklin anymore, but you're still going to be writing, which is very important to those who care about truth. Tell us about your future plans. What do you have going? What's on the back burner?
As of today, or I guess tomorrow, is my last day writing through and being published with Miles Franklin. I am going to retain my relationship with them. I broker gold and silver business through them. They have very fair pricing, excellent service, and they're honest people. And that's, to me, that's the most important thing. If you're going to do business with someone, they got to be honest. So I am going to keep my relationship in that respect. But as of in the neighborhood of June 1st, I'll be writing, partnering with Jim Sinclair. I do know that we'll probably be doing some conferences and seminars and talks. And somewhere in the neighborhood of June 1st, I'll be writing again. I can't tell you where they'll be found, but you'll find them.
Okay. Well, I definitely want to invite you to please submit your articles to us at SGT Report. We'll link back to wherever you want.
Absolutely.
If you have started a website, if there's anything
Sure.
that we can do. The most important thing is getting your work out there, and people read your work at SGT Report. We post every single one every single day. We do appreciate your time and your expertise, Bill. If there's anything we can do to support your work in the future, please don't hesitate to call on me.
Thank you, Sean. I truly appreciate it.
Well, thank you. And guys, thanks so much for listening. Shore up your reserves, batten down the hatches. I really do think that, the unfolding collapse is going to be far worse than anything we've ever seen. And it actually may spell the end of our republic. Once we lose the dollar, I'm not sure what we have left. God bless you all. I hope that you can hang in there and weather the storm. And we really appreciate your support at SGT Report, thelibertymill.com, and thephaser.com. Real news 24/7. Thanks so much and have a great week. Thank you, Bill.
Thanks, Sean.